How's it going, everybody? Welcome to the channel. Welcome back to the channel. Anyways, what is good? All right, so Goldman Sachs, they're a fairly big bank in America. G-Sachs, I don't know what nicknames they have. Goldman Sachs, whatever. Sachs off fifth. No, not that one. Anyways, Goldman Sachs, fairly big bank, and they just released an interesting article. They said the top 20 stocks to invest in. Yes, 20 stocks. And they named them. They were like, oh yeah? Yeah, one stock, two stock, three stock, 20. 20 stocks to buy. All right, so we got a lot of stocks here. I can't talk about all of them because this make this video really, really long. If any of you want to see an in-depth video on any of these stocks, I have talked about some of these stocks before in the past, just leave a comment down there. And while you're commenting, also remember to like this video and hit the subscribe button and turn on that bell notification to get notified if I post one of those videos. Anyways, let's get into this video of the top 20 stocks Goldman Sachs is telling you to put your money into. So Goldman Sachs 20 best stocks to invest in now. What are the best stocks to buy after a major rally and amid heightened macro risks? We advocate 3 strategies for fund managers. Goldman Sachs' David Kostin writes in a note targeted to institutional clients. Own companies with a low operating leverage as opposed to high, firms with low labor costs as a share of revenues as opposed to high, and stocks with a combination of dividend, yield, and growth. Pretty good 3 things to look over. So Kostin justifies each of these strategies respectively. Stocks with low operating leverage outperform as the economy decelerates. Wage inflation has accelerated above 3%, and for many firms is outpacing the increase in prices charged. Downward pressure on record high profit margins from labor inflation may prompt negative EPS revisions that are often associated with falling share prices. And short-term and long-term U.S. interest rates are forecast to remain low for a considerable period of time. Stocks with a combination of dividend yield and growth should outperform. Goldman Sachs offers clients baskets of stocks for each strategy. Kostin, however, identified 20 stocks that overlap 2 or more of these strategies. So then it says low operating leverage, low labor costs, and dividend growth. And that only has 2 companies, which is Texas Instruments and Gilead Sciences. Then we have low operating leverage and low labor costs. So it's Biogen, LyondellBasell Industries, and Feminol Corp, Versign, Expediators, IPG Photosonics Corp, Plute Group, and then low operating leverage and dividend growth. So that's AbbVie, Amgen, Starbucks, Lam Research Corp, KLA Tencor Corp, and Omnicom Group. Then for low labor costs and dividend growth, we have AT&T, AES Corp, Western Union, Foot Locker, and Hanes Brands, Inc. Kostin notes that the fund management industry has been hit with a combination of underperformance and client outflows. But fund managers want to outperform, don't we all? He explained. Maybe these picks will help. Alright, so there's only 2 stocks that actually hit all 3, and that was Texas Instruments, which is a semiconductor company. They produce, well, chips and whatnot, and Gilead Sciences. So they're a science company. They're pretty much worldwide, and their known claim to fame is their hepatitis drug, okay? They have other drugs as well, and more in the pipeline, but that's their kind of claim to fame drug, okay? Now, if you realize with most of the 20 stocks named here, most of them were pharmaceutical companies, all right? And that is because that sector has done terrible in the past, few months. Up to about 6 months, that sector has highly underperformed the market, okay? It's been one of the worst performing sectors. So obviously, I feel like a lot of what they're saying is going off of how they believe the stock market will do in the near future. And obviously, if rates don't get cut and everything continues to be fine and dandy and continue to strive up, then chances are that that sector is going to continue to do well, right? How this works normally in sectors is if you pick a sector and that sector is doing well, then chances are more names are going to be doing better. Now, that's not to say if you pick a bad sector, you're automatically going to lose money. It's just harder to find an individual winner. But when you have 100 stocks in a sector and the overall sector is up by a lot, and say like over 50% of the stocks are up, well, then you have more than a 50-50 shot of blindly picking a good stock, all right? But when a sector is, say, 90% down and only 10 are up out of the 100 stocks, then you have a 1 in 10 chance of picking a good company just based on dumb luck, right? So if you actually do your research and everything, that obviously increases the odds dramatically. So if you're now in a sector that's overall done bad and you pick some names out of there, chances are they're going to maybe do well. You have, in my opinion, a higher chance. So I think that's what Goldman Sachs is kind of doing here. They're going off of a lot of momentum in the stock market, and they're seeing that some of these stocks are going really high. Starbucks, for example, is at its 52-week high and continuing to kind of overtake it. And this is a stock that a year ago was under 50. It was in the 40s. I did a video on Starbucks saying that, they had its issues, but at this price, it was a good buy. And obviously that turned out to be true. At that price, I did believe it was a good buy. I personally didn't buy any because I'm not a huge Starbucks fan, and it's not a type of company I want to own. Obviously, I would have made money on it, but there's other companies I made money on, so you can't pick them all. It's just only so much money you have to invest, right? Anyways, Starbucks is a pretty decent company. However, at these levels, it's a little high. I think they will continue to go up a little bit further, probably crossing the $80 mark, but then probably going to hit some resistance at some point. This stock is getting pretty expensive pretty quickly, and obviously their dividend yield is starting to contract and everything like that, so it's starting to look less and less good, right? It's starting to look less and less attractive as a stock and as a company. They obviously still do have their problems, but overall decent company. A lot of the companies they named are fairly well known. I don't know all of them. There's like 3 or 4 I never heard of in that list. I'm gonna have to look into them. Overall, I feel like they went pretty safe on most of their stocks. There's some that I feel like they, maybe could have added or not, but they did have their 3 criterias, so I guess it hit. So I guess stocks they didn't name maybe didn't hit those criterias as well, and they didn't like them as much. But just going off of this looks like a total momentum play on Goldman Sachs' part to capitalize on a failing sector, and this is what they believe will be doing well into the future. It's a little surprising. Gilead, they are struggling to really push products onto the market and get everything going again. They're still doing overall well, and their cash flow is really well, and their dividends safe. So for that factors as well, but overall driving growth has been an issue since they've had that breakthrough in the hepatitis department. So that's something to look out for. Overall though, these are mostly pretty safe-ish stocks. Anyways, always do your own research on these stocks. I don't know everything about all of these stocks. Anyways, we'll see how these stocks perform in maybe the next year. I'm gonna make a note that maybe in about 6 months to a year, I'm gonna review these stocks. I'm gonna see how they did. Was Goldman Sachs really that good at picking stocks? Maybe these are 3 factors to look into when picking stocks. I don't know. Everyone has different indicators and what they look for when buying stocks. So I'm going to write these things down. I'm going to start looking into stocks that are good like this, see what's the goods, the bads, the pros, the cons, the babies and the bananas or something. I don't know. Anyways, we'll see how these stocks perform. Maybe I'll make a video updating everyone on how these performed and if they were good, if they're bad, if Goldman Sachs is a banger at picking stocks or if they suck. We'll see. Anyways, hope you enjoyed this video, and until next time, have an amazing, awesome, life-changing day, and I'll see you next time.